years ago, and went to graduate school in Springfield, had a scholarship, and then I went out west and I taught on the university level out in Oregon, and I also taught at the university level in Illinois. I love teaching. I was a graduate assistant, so I really enjoyed teaching, and which is really why I'm doing this here, is I just love helping people. I love teaching, and after that, I got in the investments field in 1986. I worked for Dean Witter, left there, went with a regional wirehouse here in St. Louis, so I was there for the crash of '87 and everything in between. And some of you may remember '87, but I was in the thick of it. And I'm really thankful for this because, and again, this isn't me, this is just divine stuff. One of the things that really helped me was I met a man named Martin Zweig. I don't know if anybody ever watched. You ever watch Wall Street Week? Yeah, let me know wrong. I'm going way back now, okay? Dr. Martin Zweig was one of my heroes. He is one of my heroes. He's died. But I subscribed to his newsletter, calls it the Zweig Forecast. And you can say, what's this have to do with tonight? Well, this will all make sense to you. Everything comes together. And Martin Zweig, if you have a chance, read his book, Winning on Wall Street. Okay? And here's the game plan. If you buy the book and you don't like it, I'll buy it from you. Seriously, I will. Because I'll give it to somebody else or sell it to somebody else. It's that good of a book. I will tell you this, one of the things that he talked about, and we'll talk more about it tonight, is he studied charts. And he was constantly, in 1987, 2 months before the market peaked and started to fall, he was telling people, put sell stops in on your stocks that you have. And I had managed accounts, I had a big doctor here in St. Louis, so I had sell stops in. And it was so intriguing because these were good till cancel orders. And what I would do is, I'd go up to the ticket window to see if there were any orders hit that day. And I go, oh, I got a sell ticket. And I still remember this, it's so vivid. I get a sell ticket, I go, I didn't put an order in today, what is it? And it was a sell order from like 2 months before. And what was happening was, picture this, let's suppose you've got clients that own, we'll just say 60, 70, 100 stocks, all different kinds of stocks. And you're constantly, well, picture you, if you own 60 stocks, and you said, you know what, I never want to go through a crash of '87. You know, I looked at the chart, and the stock's $20 a share. I'll put a sell stop at 15 below the 200-day, just in case. I don't want the thing crying. And you just put in good till cancel sell stops. That's what I did. No day trades, by the way, no 5-minute charts, none of that. By the way, folks, this is 1987, all right? I mean, we're talking really cryptic stuff, okay? We didn't have charts in our offices. So I got stopped out of everything 2 weeks before the market crashed in 1987. And now, I've said this to the group before, and I'll share this with you. If you had a basket, let's suppose you all own 20 stocks, and every day you're getting stopped out of a couple of stocks. Are you going to sit there and say, well, shoes, I guess I'll buy something? It's analogous to this. We're going to buy a house, and we're driving through a neighborhood, and we're looking, and say, oh, that house is on fire. Well, that house is on fire. Ooh, that one's on fire, too. I don't think I want to buy in this neighborhood. It's a goofy analogy, but it's honest to God truth. So what happened was, I got stopped out of stuff, and again, I thank Dr. Martin Zweig, but my clients were completely out of the market like a week and a half before the market crashed. We were out. This one doctor called me, and he's crying, Pat, how much do we lose? And I said, doctor, we've been out. You haven't owned anything for a while. He said, seriously? Yeah. So then what did? We just waited, and then we glided back in. But at the same time, I have to share this with you, and this is all relevant. Again, my background is in teaching and research. So I said to myself, you know what? I want to read about more of these people. So I had a friend of mine, I used to give, a lot of these brokers didn't know anything about stocks, which is really, they don't. They really don't. Okay? If they had to live off their investments, their investing profits, they'd starve. All right? It's a pretty sad situation in the brokerage industry, to tell you the truth. So they would ask me to teach classes in Clayton on stocks. So I would. The brokers, just explain things. No day traders, nothing like that. Just explaining, why do stocks go up in price? Why do stocks go down in price? And some people say, well, that's really simple. Most people really never think about it. Why? And I could ask you, and I'm sure you know. Well, if it's going up in price, there's more buyers than sellers. And if it's going down, there's more sellers than buyers. You can say that's common sense. I'll be very honest. Most people have never really thought about it. And it's something we need to do, because peel away all the layers of the onion, folks, I got to tell you, everybody overthinks this, and they use all kinds of oscillators and MACD and relative strength and all this other stuff. Just simplify it. And I'll also tell you something else. Do you think I have cable TV in my office? I haven't had cable TV for 3 years in my office. I don't have CNBC on. I don't watch any of that crap. Why? Because it's a bunch of people giving a bunch of opinions. But if push came to shove, could they live off their investing? Live off of it, not the commissions. Live off their investing profits. And I dare say hardly any of them could. All right? Yes, sir.
Could you explain the psychology? Why were the... I understand you were getting stopped out.
Yes.
But who knew? Who was selling 2 weeks in advance or a month in advance before the crash?
That's a great question. You know what? Institutions were. Institutions were. And this is the beauty of it. If you go back, and if you have a chance to do this, study 1987. Pull up a chart. Maybe we can do it tonight. You pull up a chart in 1987, you can see the warning signs. You can see it. I pulled up the chart the last 2 times we've had a meeting here. It wasn't a crash, but folks, I got to tell you, in October of last year, all the way through January of this, that was a pretty big drop. In fact, Amazon lost 700 points in about 6 to 7 weeks. You say 700 points is not. Well, a third of its value. That's a lot of money. That's a heck of a lot of money. The charts, I will tell you this. The charts will tell you everything you know that you need to know, because it is truly a function of supply and demand. Now, we can sit here and talk. What are they talking about today on the news? Does anybody know in the investments field with the yield curve? We have a... Inverted. Oh, yeah. Oh, geez. We got an inverted yield curve. Oh, geez. Okay. We can explain what that is, but I will tell you this. All you need to do is watch the price action of the markets. Okay? The price and the volume, because it doesn't lie. Now, you can say we can have an inverted yield curve. Well, then we're talking about interest rates slowing down. So now, folks, I'm going to ask you, think about this. Why do stocks go up in price? Because there's more people buying than selling, right? Why are people buying? Because they think things are getting better, okay? Remember that. All right? Now, if things are getting better, eventually things could get too good, and so then what's the Federal Reserve do? This is all common sense, but most people don't really think about it. They try to slow the economy down. How do they do that? They raise interest rates. Exactly. So now we have 2 things happening. We could have possibly rising interest rates, but at the same time, they're trying to slow the economy down. That means that earnings are good, right? Yeah. So what's the other thing that's going up? Well, earnings are going up. Yeah, okay, inflation. That's a good point, though. Earnings are going up. So you've got rising interest rates and you've got rising earnings. Now, what do we have to do? We can just follow those and see what happens. But you can also make it really simple for yourself. And I encourage you to do this. Every day, you can look at the NASDAQ. I would encourage you to look at the NASDAQ market, and I would encourage you to look at the S&P 500. Somebody said, well, let's look at the Dow. I'll ask you all, what? Oh, by the way, I've got to back up and say one thing to you. I will never set you up for failure in here. I will never ridicule you, okay? If I ask a question and you get it wrong, that was stupid. No, that's not good educating. We're not doing that here, all right? By the way, I'll tell you this. When I was teaching on the university level, my final was 27 pages typed. So I had high expectations with these people. We've got a test for you. I'm teasing. Okay. So the doors, gone. No. So we've got rising interest rates, but we've got increasing earnings. And what they're trying to do is they're trying to walk the line. Watch the S&P 500, and we'll pull up some charts for you tonight. It will help you dramatically. And the last thing I'll say in relation to this, folks, please turn off the news. Everybody sits there and you hear all this stuff. I'm keeping it clean. You hear all this stuff on CNBC. The charts will tell you a lot, if you just get in line with them. And I'll say it again, and I will say it several times tonight. Please do not look at 5-minute charts. Don't get wrapped up in that. And I will also tell you this. I know some really good traders and investors, okay? Really good. I only know one successful day trader. One. And that's it in California. That's it. All right? And he is tied to his, when she came to visit me, that guy is tied to his computer like you wouldn't believe. He got a program. You'll love this. It not only shows you the chart, it's got sound with it. Buy sounds, and if people are buying, it's going like this, and if it's selling, it's going like this. And he's sitting in my office visiting me last year. Shit, part of my rage, I was going crazy. I'm sitting there, I'm in my office, no TV. I'm going, what the heck is that? And what's he doing? His computer has a program on it that will measure buys and sells on each stock, and he codes it so that it makes it naturally a different sound for buying versus selling. And what's he looking at the same time? He's looking at a 5-minute chart. And he goes, look at this. He goes, Pat, look at the volume coming in. Look at this. I'm like, oh, geez, Louise. He does a good job. So my point is this, leave it alone. Tonight we're going to talk about history. We're also going to talk about options. We're going to pull up some charts for you. And again, my background is in research. My background is in investing. I've been doing it since 1986, and I'm very thankful for this. I was involved with it. I was a broker and an investments advisor, and I finally got to the point where I was making more money in my account in profits than I was in commissions and fees from clients. And so in 2000, I said, screw it, I'm just going to get out of the business. So I thank God for this. I'm not bragging, okay? But from 2000 all the way through, we lived off our investing profits. That's it. You say, you got wealthy relatives? My dad's dead. I was 29 when my dad died. I don't have any wealthy relatives. And I have 4 kids. All of them in private schools at the same time. And not bragging. I'm just very, very thankful. But I was very serious about it. And I've had people say, I couldn't work with you. I've had more than a couple of people because you're so driven. And I'll tell you the truth. I love the challenge of it. And I hope you do too. But my goal is this, is just to, tonight, share some things with you that will speed up your learning curve. Tell you some things that maybe you haven't heard that will help you. And the other thing I'll say is, this is open room here to, hey, if I say something you don't understand, just raise your, Pat, I don't know what you mean. Just ask me. And let's talk about it. All right? Just, we'll be polite, but ask questions. Yes, sir.
Password for the Wi-Fi, where you use it. That's for the hotel.
He's got one, it's like Charles 1425.
Yep. Oh, okay.
There you go.
What's the user?
So, I think what we're going to do, what I'd like to do is share some foundations with you. I think that
It's BW, the Charles Hotel. Sorry.
no, that's all right. Thank you for your help.
And are you going to talk about the membership and all that? Or?
Yeah. Oh, yes. Definitely. Yes. Well, here, I can lay that out now. Okay, let's do that. It's a good question. I got out of the business and was just, like I said, a private investor, been working on my house since 1993. My manager said, oh, you can't do that. You're not going to be able. And I said, I'm going to try. So that's what I did. Owen and I talked about it, and I saw other people doing this on social media where they started sites where they would charge and teach people about investing and give stock ideas. A lot of them really don't teach too much, but they give stock ideas. And they're good. I'm not knocking anybody, okay? They're good. Well, I was sitting there, I was talking to Owen about it, and again, I've been an IBD meetup leader forever, for like 13 years. By the way, just to let you know, I've had lunch with Bill O'Neill twice. If you know who Bill O'Neill is, so I've had lunch with him. I'll take it a step further. I've met Martin Zweig. I also met Ed Sakota. So I made it a point to schmooze in and meet these people. And another guy I'm going to work with him to try to meet fairly soon is Mark Minervini. We've gone back and forth a little bit. Is I want to meet these people. And it's not because I'm schmoozing and trying to be, it's just that I want to learn from them. It's not, no, I just want to learn from them. That's all. So I started a site, and it's called Mission Winners. That's one word. And it's mine and Owen. And what do? We have a site where all day long, in the VIP feed on Twitter, I talk about stocks. And I give, and some of you know it, I give buy alerts and sell alerts during the day, real time. And I can look you all in the eye and tell you this. And I look at you, pardon? From the key list. Exactly. I get the information from the key list. And I can look every person in this eye right now, and I can look you right in the eye and tell you, because I know you're a member. I never, ever buy or sell before I tell you what I'm doing. And then I wait. And then I post my fill. I don't front run. That's immoral. Not that I'm going to move the price of the stock. Geez, I'm going to move the price.
You track your returns?
Yeah.
How are they?
They're good. We'll talk about that. We'll quantify that. That's my background. We'll quantify that. Oh, yeah. We beat the markets. We beat the markets, and when the thing's dropping, we're out. We are out, and we will stay out for a long time, and some of you know this. We will stay out, and we will wait for the right time to move back in. So, I started Mission Winners. You can say, what's Mission Winners stand for? I'll tell you this. First off, I'm going to back up and tell you about Canslim. Who's read How to Make Money in Stocks by Bill O'Neill? Okay, then you all know what Canslim is, the acronym for Canslim. Does anybody not know what it is and want to know what it is? Thank you. All right. The C stands for, thank you. The C stands for current earnings. This is Bill O'Neill's own acronym, okay? The C stands for, by the way, you can say, does everybody know who Bill O'Neill is? Anybody not know who Bill O'Neill is? Okay, thank you. Good. By the way, appreciate that. I wanted to say this. If I say something and you don't know what I'm, just say, Pat, whoa, who's he? Just say it. We're all friends here. We can talk about it. Bill O'Neill is written up in Market Wizard. He's been called one of the, best investors ever. Bill O'Neill did a tremendous amount of research at a company called Hayden Stone as a broker, before I was born, and determined what are the characteristics and traits of super stocks, stocks that make big moves. And here's what he found. And this is important. Stocks that last quarter's earnings were up 25% or higher. That's the C. A, annual earnings growth. He doesn't want to buy a company that just has one hot quarter. He wants some consistency there. Annual earnings growth of 25% or higher. Annual, year over year. Now, that one is a little gray. That's not cut in stone. The N in Canslim stands for something new. A new product, a new service, new management, something going on. Okay? The S stands for shares outstanding. Now, this is really interesting. When Bill O'Neill developed Canslim back in the 60s, he found that companies that were really small outperformed the big monolithic companies. That is still true to a point today, but the problem with it is, if you buy stocks that trade like 20 or 30,000 shares a day today, the volatility can rip you. So that's changed a lot, okay? Something to take into consideration.
The acronym is C-A-N-S-L-M?
S-L-I-M.
Okay, C-A-N-S-L-I-M.
Yes, sir. Canslim. The L stands for leader. You can say, Patrick, what do you mean by leader? A leader in its field. A company, I'll ask you, hey, we're going to do an internet search. We're going to go on Bing. Don't feed me that. Where do we go? Google. Thank you. You go to the franchises, all right? Leaders in their field. Leaders in their field are also companies from a quantifiable perspective that have great numbers. They're the cream of the crop. They're the best. And again, you can think of some of them. Amazon, right? Netflix, Google, Apple, Baidu. Companies that are just, they are franchises. They are the best of the best. For years, one of them was Priceline, which is now Booking.com. The problem with it is it trades so thin that I had to take it out of my list, and so I don't look at it anymore. All right? So leader. The I stands for institutional support. We can all get together, pool money and buy stuff. We ain't going to move the price. It's not us. We need to see bigger money following it also. And then finally, the M stands for the market. The market. Now, I'll ask you, of those letters, which one's the most important?
Market.
The market. The market. That's why we started Mission Winners. What comes first? The M. So what's Mission Winners stand for? Markets, industries, sectors, stocks, institutional support, outstanding management, or outstanding product, or outstanding services. That's the O. And then the M, and I got this one from my son, who works for Google. And I said, what should I do with the N? And Ben said, and Ben is very driven. Ben makes me look like rigor mortis. The N, never say never. Mindset. He said, Dad, that's the biggest part of this. Never say never. And I agree with him. There's your mindset. So that's Mission Winners. So Owen and I started this a year and a half ago. Year and a half ago. And we are online. We are on Twitter. You can Google search us. On the big Twitter feed, we have about 14,700 followers, 14,800 followers. And we had none a year and a half ago. And we have followers, and we have members on all 7 continents, paid members. On Mission Winners, we just got a guy from Israel. So we have this, and by the way, I'm not here trying to sell you on it, okay? But I'm going to explain what we do because you ask. What do I do? Every day in the VIP feed on Mission Winners, I give buy and sell alerts on stocks. Every night, I produce what's called a key list. And a key list is the stocks that I am interested in the next day. Normally, it's between 10 and 20 stocks. The fewer, the better. I have it sorted. I'll ask you, from what I've just said, how do you think I have the key list sorted? Is it sorted alphabetically or is it sorted by... Thank you. I know you know that, right? It's sorted by industry group. You say, Patrick, why do you say that? I'll share something with you. This is an O'Neill product. You can't get this anymore, by the way. All right? Sure you can. We'll talk about that later, too. 40 Great Stock Market Winners. This came out in 1999. And I've read this before, but I want to share a couple of things with you. Again, folks, my background is quantifiable. I don't want to just say, oh, that sounds good. No. Let's quantify the things so that we know where we can put our money. Because there are times you want to go in deeper, right? You want to put a commitment in it. And you better know what you're doing, or guess what? You're going to run out of money. 87. This is from Bill O'Neill Research. 40 Great Stock Market Winners. 87% of these stocks had earnings of 30% or higher. 87%. Those are good odds, folks. You could go to the casino right down the road here with the odds of 87%, couldn't you? And I think you'd do pretty dang good. Had earnings of 30% or higher. 71% had earnings of 50% or higher before they made their move. 86% had sales up 30% or higher. 63% had sales up 50% or higher before they made their move. More than 2/3 of the examples were the result of industry group moves that resulted from strength within an industry. So that's why we switched from Canslim to Mission. We want to look at leading groups, markets, industries, sectors. That's why we put it that way. Now you all know this. By the way, in this book, you can say, well, Pat, and I know I do this, I've done this before, but I want to share this with you. You'll know some of these stocks from days gone by. Anybody remember America Online? Sure, America Online. That stock went up 557% in 6 months. That's a trip to the bank. You can say, well, Patrick, tell me their numbers. 3 quarters before they made their move, the earnings were up 130% and sales were up 45%. 2 quarters before they made their move, the earnings were up 900% and sales were up 54%. The quarter before, not after, the quarter before it made its move, earnings were up 283% and sales were up 67%. Okay, you'll know some of these names. Oh, here's one for you. And I know Owen will know this one. Remember when you had to have a battery backup supply with your computer just in case you lost power? Who made that? Anybody remember? American? That's it! Good. American Power Conversion. The stock went up 2,900% in 48 months. And by the way, these aren't low-price stocks, all right? When it broke out, it broke out of a base of $23 a share. That's not a low-price stock. Earnings up, I'm going to give you the last 4 quarters earnings. From the 4 quarters before it broke out to the quarter it broke out. We're not going to beat a horse with this, but I just want to quantify things. Up 56%, up 44%, up 127%, up 93%. That's the numbers before it broke out. Sales growth, 126%, 97%, 120%, 80%. American Power Conversion. A little company called Amgen. You ever heard of Amgen? 660% gain in 21 months. Anybody here golf? Any golfers in here? Yeah, really. There's a great, these 2 guys are golfing, you know. And the guy says, watch this. He takes his golf ball and he drives it right into the lake. And they go, that was stupid. Why'd you do that? He goes, just watch. All of a sudden, the ball pops out of the water. It's got a little sail on it, and it goes across to the other side of the lake. He goes, come on, let's go get it. I said, that's unfreaking believable. He goes, watch this. He hits it right deep into the woods. I go, that's stupid. That's stupid. He goes, listen. I hear a beeping noise. He goes, come with me. We walk in there, and it's glowing red. I said, that's amazing. I said, I got to ask you this. I want to buy one of those. Where did you find this? He goes, I found it. Okay, here we go. Anybody here golf? Okay, name the golf company, golf clubs. That's good.
Big
Bertha? Thank you. Callaway Golf. Eli. Here are the earnings numbers. By the way, this stock went up 345% in 16 months. By the way, it's not a low-price stock. When it broke out, it was $35 a share. We're not going, oh yeah, that was easy. It was a $4 stock. No, it's $35. Earnings growth, 2,200%, 529%, 157%, 97%. Revenues up 238%, up 196%, up 157%, up 111%. These are good companies. Remember Cisco Systems? Who remembers Cisco Systems? They're still public. They're still out there. Here we go. This stock went up 1,000, we were involved in some of these, 1,900% in 41 months. That's stuff that'll change your life. Earnings, 300%, 188, 189, 150. Sales, 244. I won't be there. Okay, one of the first, so I'm going to make you smile, one of the first personal computer companies. Compaq was one of them, but who else? Bigger than them.
Texas Instruments. How about that?
That's great. How about Dell? Dell. Y'all get great answers, by the way. By the way, I think somebody said Computer Associates. Did somebody mention it? Computer Associates? Computer Associates is in here. Dell Computer, 1,000, I'm going to stop in a minute, 1,780% gain in 27 months. 4 quarters before, their earnings were up 3%. But then all of a sudden, they kick it into overdrive. Plus 53, plus 74, plus 108. 108%. EMC Corporation, Dreyfus, Home Depot. Y'all remember Home Depot? International Game Technology. Anybody heard of International Game Technology? Casino stuff? LA Gear. Remember LA Gear, the tennis shoes? That stock went up 1,400% in 17 months. And you can say, well, Pat, it was a 14-cent stock when it broke out. No, that stock broke out at $12 a share. $12, it's not a low price stock. $12 a share. Explosive earnings and sales. I'll stop with Micron Technology. Way back in the day. Microsoft is in here. Anyway, 40 great stock market winners. My point is this. Quantifying things makes it easy. The idea of we might miss something, I can live with it because we stack the deck in our favor in what to look for. And that's what we're after. So, if you have any questions on it, let me know. Now, I'm going to take it a step further, and some of you heard this last month, but I've got to share it with you again. This is for everybody. This is my own research from 2007. You can see that? Isn't that pretty? Can we pull up charts? Is that possible? And you got markers? Oh, good. Look at this. Can you punch up POT for me? And can you change the date back to 2007?
type,
What platform is that?
That's a great question. This is called MarketSmith. MarketSmith is, guess who?
you actually get it for free right now.
That's right, this week only. That is a Bill O'Neill product. And I will also tell you this, I was in the beta test group for the development of this product. They invited me.
So you don't use the one that brokerage account that you go through? It's like I use my Fidelity for active day trading.
Oh, that's good.
Is this better, more complex?
We'll show you. Yes.
This has like all the oscillators and indicators and all the nonsense that you could possibly need.
Exactly.
Drawing a chart sucks.
Oh, yeah. Well, this is actually, to draw that line, just do Control-C and you draw the line, you know, it's just pretty simple. But, oh, can I say one thing to y'all? Please, I'm not here. Can you see that okay? Is this blocking your view? I don't want you to think like, oh, you're trying to sell me on MarketSmith or Internet. I'm going to tell you all something. I'm going to commit heresy. Bill O'Neill's newspaper is called what? Investors? Yeah, IBD, Investors Daily. I know you're all sitting down. I don't subscribe to the paper. I don't even subscribe to it. You know why? I can get dang near don't tell anybody there that I said this, okay? Because I'll get in trouble. You can get almost everything you need for free. All right? Now, if you're like, I don't have time to do the research, then go ahead and get the paper. All right? But you can get so much online from investors.com that you don't have to pay for. I mean, I post a lot of this stuff on Mission Winners. Those are articles, shit, they're free. I just take them and copy and paste the link, you know. So this is MarketSmith. It's a Bill O'Neill product. This is the beauty of it. Can you all see that okay? Okay.
Is it in focus?
Yeah, at least it is for me. This looks real clear from here. Okay, great numbers. You can see the earnings numbers down here and the sales number, quarter over quarter. Okay, I'll show you a couple of things on this chart. This is important. Just things that are relevant to what we're trying to do. Group relative strength. He has it rated A through E, and it's A+, which is the absolute best. All right? These are the actual earnings numbers, and these are the estimates going forward. All right? This is the chart. This is price and volume. Down at the bottom shows the quarterly earnings and the quarterly sales growth quarter to quarter. And you can say, well, here they don't have anything. Yeah, they didn't make money then. Okay? They lost money. But sales were up 37%. So you can see what to look at in here. All right? And this is the stock that we own, and we bought it right through here. And I bet you some of you all don't have to say it because I'm not going to do that to you, but I'm confident there's probably some people in this room that own this stock, okay? So right here, look at the volume that came in this. This is what I tell people all the time. People talk with their mouths and vote with their pocketbooks. How is that reflected? By volume. Volume. And they bought it right here. This is MarketSmith. And would you all like to see something it can do? Would you like that, or it's like, no, I don't really care?
Sure.
Would that be all right? And by the way, please, I'm not trying to get you to subscribe. I don't get anything from them at all. Okay, everybody knows from the old IDD meetup, what's the only thing I've ever gotten from Bill O'Neill and Company? Yeah, frickin' cup. A mug. This son of a bitch broke. Okay.
What is this amount, about 150 a month, or what is that?
Yeah, I think it is. Gosh, I don't know.
$1,500 a year.
Okay. Yeah, it's not cheap.
For MarketSmith?
Yeah. But they are, yes.
15 months, 15 months for $1,500.
Oh, they are. Thank you. 1,500. Okay. But this week it's free. You're sitting there. Why? Oh, thank you very much. You're like, Pat, I wish we had to meet up on Monday, so you tell me. Yeah, but this week it's free. All the features, everything, it's free. So it's great to move it around. All right. So would you be interested in seeing a custom screen being made? Or would you like, no, I don't really care?
Yes.
Would you like to see that?
Yes, can you do it for Apple?
Well, yeah. You want to see a chart of Apple?
I would love to see what plot points, oscillators, all this stuff. I just started doing this 3 weeks ago, so any information on
Good.
it is so good.
Good. Excellent. I respect your drive and ambition. One of the things I would say to you is this. Please strive to stay away, don't get mad at me, from oscillators, RSI, percent. Why? Because I have a degree in psychology. Bias will enter into your thought processes when you're saying, well, look, gosh, the stochastics is way up there. It's overrated. This thing's overbought. It's overbought. I got to look for a spot to sell. I can show you stocks with an oscillator on it that it's been overbought for a long time, and you had countless. Two of the best indicators you can use?
MACD.
No, that's another oscillator.
Everything the internet says, you're saying the opposite.
That's exactly right. And that's why the people on the internet don't freaking make money. So, no, that sounds bad. If their lives depended on it, would they be able to support their families? That sounds like I'm sounding like a jerk, but it's a fact. So, oh, by the way, let me back up and say, do I ever have losses? Heck yeah. Yeah, 5 days a week. Anybody who says they never lose money is a liar. But we're very precise, and some of you know this, we're very precise in our entries. Extremely precise. You can say, what's Bill O'Neill limit losses at? 5 to 7%. I ain't freaking going to limit my losses at 5 to 7%. If it's good above $60 a share and I'm buying it, if it's falling down below 59 or 58, I'm selling. I'm out. Why? Because after doing this for this long, for 30 frickin' years, the best ones just frickin' fly. They just go. And the biggest problem you have is you can't get your stock. Volume floods it, okay? So here's Apple.
So finish your answer his question. The two best indicators are?
Price and volume. That's it. And then I will take it a step further and say this. You can see, this is my program, by the way. This is mine. This is my own personal program right here. That's on Owen's computer. You can see, what do I have on here? Let's go through this. By the way, I have to tell you all something. Please don't think I picked that color. They have a problem with their program, and they've heard from me 3 times. And they don't really like me out there, okay? Because this is disgusting.
Yeah, I tried to change the background.
I know, it irritates the crap out of it. It keeps going back to this. So you can change it back to white. In fact, here, Owen, do me a favor, okay?
Yeah, I got it.
Okay. Oh, no.
It won't stay.
It won't stay. I know. I've called them up. I said, I won't tell you what I say. Okay, so this is Apple Computer, all right? It's a Maxless stock. So let's go through here and just look at it. There's the earnings and the sales numbers, okay? Right here, this is relative strength. Now.
The RSI? I'm so sorry, guys.
No.
We're going to play this all night.
It should be. That's awesome. No, these are great questions. You know why? Because a lot of people don't know the difference between relative strength and RSI. They don't know.
Same thing.
No, they're not. That's a great question. Okay, so RSI is a Wells Wilder. You know that name?
No, but I understand it's just like the Bollinger Band overbought, oversold.
Okay, well, the Bollinger Band will just show it, but it won't show you by how much it's overbought. Well, it depends on standard deviation. We're not going to get it. Okay, relative strength right here, that is price action of this stock relative to what the S&P 500 is doing.
One more time?
You betcha. Relative strength is and that's this line right here, the solid blue line. That is the price action of the stock relative to what the S&P 500 is doing. So I want you to think about this now. I wish we could take the chart off, and I'd ask you the question. But I want to see if you get the concept. Boy, that was really good, Owen. See, there's a devious side to him that I just really like.
Work together.
Yeah, there you go. I'm telling you, like he's learning to hate me. Okay, so think about this. The relative strength line is moving up. It's not an oscillator. It's price relative to the S&P 500. What the S&P 500 is doing. If the relative strength line is moving up, what is the price of that stock doing relative to the price of the S&P 500? Is it moving up the same, or is it moving up faster? Thank you. Remember that. If the relative strength line is moving up, price is going up faster than the price of the S&P 500 is going up. All right, now I'm going to throw you a curveball. The stock price is going flat. All right? Just flat, just sideways for a couple of months. But the relative strength line is going up. What is the S&P 500 doing?
Going down.
You all are good. No, take my credit card. No, see, most people can't get that. That's exactly right. The relative strength, the S&P 500 is going down. All right. price of the stock is going up. It's going up. And the relative strength line is flat or going down. You're like, wait, the price of the freaking stock's going up. How can the relative strength line be going down? How?
S&P's going up fast.
Thank you. Thank you. Did everybody catch that? Does everybody... Excellent. Does everybody own that? If you can remember that... Have you ever heard that from anybody? Have you ever read it anywhere? There you go. There you go. That's what we'll talk about. That's what we talk about, is now you have a leg up on the competition because they don't know it. And that's pretty... Knowledge is power, and you just got it right there. That's good stuff. That's really good. So, can we go back?
We fire this one.
Thank you. So we've got relative strength. Now, I've said this before and I'll say it again. If I say something that you don't understand, just say, well, Pat, I don't know what you mean. We'll go through it. All right? Just to let you know. So, this is relative strength price movement relative to the S&P 500. This black line here is the actual price movement of the S&P 500 index. This black line is the 200-day moving average. And I encourage you, you can do whatever you want, but I have found through 30 plus years, the best moving averages, and I've tweaked it like you wouldn't frickin' believe. I mean, that's why I have no hair. Right here, 200-day I keep. Why do I keep the 200-day on there? Because everybody looks at the 200-day. If everybody's looking at a moving average, can that therefore become, by default, a trigger point for people? Yeah, I want to know that. All right? So that's the 200. The red line is what moving average? What do you think? 50. 50-day. Now I'm going to take it a step further. That is the 50-day simple moving average. Simple. There are different types of moving averages. And I'm not trying to get, the forest for the trees. It's like, guys, man, you're nitpicking this crap. God, no, it's important. It's the 50-day simple moving average line. It's just a simple, smooth line. It's the average price. Do y'all know how it's computed? Do you want to know?
Sure.
Okay. And again, nobody ever taught. Nobody's ever talked about this on CNBC or Fox Business. You take the last price for the last 50 days, add it up and divide by 50, and you get a point. And that's 1 point on the line. Tomorrow, you do it, you drop off 50 days, put tomorrow in there, 50 days. Yes, great question. Closing price. All right, this moving average right here, the purple one, is the 20-day simple moving average. The 20-day. Simple moving average. And this little green one is yeah, you got it. Which one? What number? Yeah, Martin, okay. That's the 8-period exponential moving average. Now, do you want to know why?
What does that mean? What's the explanation?
Great question. It's a smoothing moving average that takes in consideration greater emphasis on recent price action versus lagging price action, and so it skews the line closer to the current price movement. That's exponential. Now, I've got to share this with you. You can say, why do you use that? And I'll tell you why. Has anybody here, what's everybody use? What's the default close moving average on all computer programs?
50.
The 50? The one that's up, the one that's close though to price. What's everybody use? Thank you. Thank you. The 10, simple or exponential?
Simple.
Thank you. 10 simple. All right. I'm going to share a story with you. Anybody here ever heard of Ed Secoda? Ed Secoda? Okay? You might want to write this down. His name's Ed Secota, S-E-Y-K-O-T-A. And do a Google search on Ed Secota. Ed Secota's been written up in Market Wizard. Ed Secota's managed commodities accounts. We're up over 100,000% over a course of a certain number of years. Ed Secota is an MIT graduate. And I'm a schmoozer, and I maneuvered myself in that I got to talk with him too and ask him questions one-on-one. Ed Secota, everybody uses the 10 simple. Ed Secota uses the 5 exponential moving average. So I said to myself, if it's good enough for Ed Secota, it's good enough for Pale Walker. So I switched to the 5. See, and you can say, Pale, this is history crap. I don't really care. No, this is relevant to you. This will help you, so you learn from my mistakes. So I switched from the 10-period simple to the 5-period exponential. Now, if it's a 5-period exponential moving average, that means the price is really close. The price of the moving average is really close to the price of the stock, right? So any gyrations in the stock, it's going to hit that 5-period exponential moving average. If that's my trigger to sell, what do? I sell. Jeez, I was selling all the time. And the thing would hit it, drop down a little bit, and then it would go back up. I go, this is bull. All right? So I said, well, I'll go back to the 10. The 10 was a little bit too far away. So then I started noodling with it. And I came up with, years ago, the best moving average that I have found for stocks is the 8-period exponential moving average. And now if you go on a lot of different websites, you'll see that's what they use. It's the 8. Now you can say, well, wait a minute. Ed Secota used the 5. Ed Secota traded commodities. And this will shock you. If you take a look at commodities charts, they're less volatile than stock charts. You can say, oh, come on. Do your homework and you'll see. So that's a little bit of history for you. Any questions on that at all? I covered a lot right there, and I know it. But let's continue on with this. What do you say? So here's Apple. I explained the moving the moving averages and everything like this.
Yeah, also could I add, if
Yes.
you don't mind?
Feel free.
We're doing a daily chart, okay? Because there's ways to look at the daily, weekly, and then also the other time, the hourly.
Right. And I think I said it before, and I'll say it again. Folks, if you need to get up close and personal with your charts, you can take it from a daily to an hourly to a 30-minute, and every once in a while, if you have to, take it to a 10-minute. But I'm begging you, stay away from the 5s, because the noise in a 5-minute chart will screw you up. Only, you can say, when would you use that? I will tell you when you would use that. Let's pull up a chart, Owen.
You should go to shorter for protection, don't you?
SVM, pardon me?
You should go to shorter time frames for protection, right?
That's when I'll take it down to see for entry. There's a great trick, though, coinciding with this. Punch up SVMK, could you? Let me show you something here. This is Sam Victor Mary King. Okay, here we go. Now, you can say, this one does not have the numbers. There's another constraint for you, and I'm going to give it to you. You want to focus on stocks that have either great earnings or great sales. What was the other thing I told you about industry groups? High industry groups. This group right here, A+ rated group. How many industry groups are there? There's 197 industry groups. What group is this? Owen, can you just tap that bar right there, related items, and then hit industry and sector. It's group number 4. It's in the top 10 groups. It's a leading group. Money flows to leading groups and leading stocks in this group. Bless you. So you see this little pattern right here? Can you do me a favor? Put your cursor right on this and drag this toolbar over a bit, can you?
Just get it out of the way.
That's, oh, no, leave it up. That's good right there, okay. So decent volume. So you can say, well, gosh, was there anything here? Here's what I'd like to do, Owen. We're looking at a daily chart, right? Boy, is that bright. We're looking at a daily chart. Please click 60 minute. Here's the 60 minute. And you can say, well, that's today, all right? And it took off. You can say, well, boy, there was some decent volume there. Take it to 30 minute. See the volume bars coming in here? When it's making a move? And now I'll show you. Take it down.
Closed yesterday or the open today?
That's today. This is,
Okay.
oh, good question. This is today. Just today. Now take it to 10. Right here, folks. See the volume bar spiking when it was making its move. There was your confirmation. And it's real simple. Now, you say, well, we're day trading it? No. We're taking a look at the daily and the weekly chart. We look at a bigger picture. Go back to the daily again. Could you, buddy? Please? It's an A-plus rated group. It's a clean and simple chart pattern. Relative strengths leading the stock up to new high ground. By the way, price and volume. I've said that. How many times have I said price and volume tonight? Enough to where you're learning to hate me. But look at the volume yesterday. Look at the volume pickup. It was a telltale sign. Relative strength was strong yesterday, and today it lifted out of this little shelf. Now, I'm not recommending buying it, please. That's not my point. It's just simple chart analysis for you that I'd like to share. So that's what you look for.
Oh, is that an IPO base and then failure? And
Yeah, that's exactly right. New base. Excellent. Yes. Now, I'm going to... We're going to stop for a second. Did I hit you with a lot?
No, I've got a lot of questions.
Well, you know what? Let's ask some questions. What do you say? Is that okay with y'all? Because I know they'll be good. Fire
All
away.
right, so if you're looking at the daily chart, what increments, so don't use increments of 5 minutes.
Yes.
You can use 30, 60, 1, 10, 15.
Great question. I use daily, weekly, hourly, 30-minute, and periodically, but hardly ever, 10-minute. And what am I looking for? I'm looking for volume confirmation as it's approaching the pivot price, the entry price.
do you ever step back and look annually or?
Oh, yeah.
Later.
Oh, yeah. I'll look at weekly charts.
Yeah.
You bet. I'll pull back to see the bigger picture. Oh, yeah, for riding trends. In fact, I'll share this with you all. You say, boy, you must just really watch your stocks. Jeez, no. If I got something that just was Square. Square is just running. I don't even have it on my front page. I don't even look at it. Why? You know why? Because I know why. Because I'll be stupid and I'll look, oh, jeez, it's dropping a little bit, and I sell it. I used to do that all the time. I would beat myself. Learn from my mistakes. Once you have something with a really good gain and you're letting it trend, all right, you can put a stop in and just take it off your front page. Don't look at it during the day.
Would that be a good weekly chart to look at?
Well, let's take a look. Let's do it, buddy. It's a new issue. Okay, great. Now, what do you see in that, folks? Talk about price and volume.
Yeah, well, you do see it, but
It came down, but then look at these volume spikes here. Big accumulation. And how do I know that it was good? It's got an A- accumulation distribution. And it had an A-, I do believe, when it was doing this too. So it had the support going. That's great. Go ahead, hit it. Hit me with another one. By the way, if y'all have any other questions,
So, for instance, on my Fidelity account, I can look at charts for today, 2-day, 5-day, 10-day, 1 month, 3 months, 6 months, and so on. So if I'm trying to understand a trend for a certain stock,
Yep.
do you start? Where do you start? Look to identify the trend.
great question.
Understand where a good time is to buy or when a good time is to sell.
I'll use the trend for a good time to buy. Well, first off, to buy, and then I'll look for sell point, triggers to sell, okay? Punch up the daily chart again, okay, Owen? Good, buddy? And you know what? Let's do this one. Let's do it.
1 minute.
Pardon?
Daily for 1 minute will be your increment, right? Your frequency.
you want to daily chart. 1 minute will drive it. You'll shoot yourself.
Oh, yeah, I told you, yeah.
You want 1 day. Pretty good.
Good.
Every bar is a day.
Okay.
Can we do something, let me answer some questions, but these might help you, all right? I've shared with you constraints of super stocks. earnings and sales numbers. I want to show you, you know they say a picture's worth 1,000 words? I want to show you right now 10,000 words. Can we do that? All right, Owen, here we go. Just punch these charts up, daily.
Okay.
Or you can drag that over, and you can drag this one over too, please. All right, here we go. STNE. And folks, we'll look at the chart, but I want you to look at the numbers. Look at the numbers. Pretty good numbers? Pretty good numbers? Simple pattern, tight here. I say this quote a lot. People talk with their mouths and vote with their pocketbooks. How can you measure voting? Volume. Boom, 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 okay? But look at the numbers, and it's in a good group. Remember that. Here's another one for you. ZS, Zulu, Sam. Look at the number. I even marked this. Look at the numbers. Right. By the way, I know you all think, I'm kind of wired tight with this. I want to show you something here. You say, well, you've been doing this a long time. I don't know if you all can see this. This is the original Daily Graphs product, the chart books. See the date on that? That's from 1993. Hi, Denise. That's from 1993. And you're an idiot. No, you know what? I still go back and study these. There's things in here that are marked up. That's 1993. Check this out. This is 2008. This is the over-the-counter book from 2008. By the way, you won't touch these. Okay, never mind. Okay. This is 1997. And it's so neat. I was talking to my good buddy Dave. Dave's in Texas. Dave and I have traded together. Dave and I worked together we were there for the crash of '87. And this is the thing that's really interesting. Today, you can make a custom screen on MarketSmith and put the parameters in there, and it comes up with a list of like 150 stocks. And you just look at those. But if you want a really great education, picture this. I used to coach baseball, all right? In batting practice, are you only going to throw strikes to the batter? They got to train their eyes on what's outside the strike zone too. These books were awesome. I'll show you some here. There's 4 charts on each page. I mean, this book contains, what do we got in here? This book contains 680 NASDAQ charts and 200 of the most active. There's 880, there's 900 charts in this frickin' book. And guess what? I went through these every Sunday. Looking at 900, and you say, how do you do it? I did it like this. Sit at the desk, or sit at the kitchen table while the kids were playing, and they just go through, no. There's one that looks good. That's what I did. I trained my eyes. Folks, you'll laugh. This was before computers. I didn't have charts. I didn't have real-time charts. So you know what I would do? Crazy. I would take a picture. I had a copy machine in my office. If I had a chart that I really liked, I'd enlarge it. I'd take a picture of it, enlarge it, and then honest to God, I would cut it out, and then I would tape it. And then the other ones that I liked, and I taped them in columns. And I had a corkboard to the right of my desk. And I had 4 columns of 5 charts. And those were my stocks for the week. And you say, well, what about like tomorrow? We didn't have charting. All I had was quotes. And I got my quotes via a radio signal, simulcast. But it worked out, it was simple, and it worked out great. Dave and I were talking about it, and he said, you know what, I think why we probably learn so much about chart reading is because you all can run screens on Fidelity and narrow your list down. This is the green book, and the blue book contains, you ready? 1,600 charts. So every Sunday, I was going through about 2,500 charts every Sunday. After a while, you really start to pick up the nuances of the chart. It's a great thing. So anyway, these are collector items, to say the least.
They're available for us to take home with you.
You can actually get those on eBay, but they're like 10 for $180.
If you can find them, yeah.
They're currently listed.
Yeah, but the days, depending on the day, yeah, But they're out there. They're out there, and you know what? It might be worth. If you want to know, is it heresy to give him my email address, Owen? Okay. Okay, thank you. See, he's so freaking good. Okay, what email? If you all need something, Pat at, what is it?
It's Pat at missionwinners.com.
Okay, Pat at missionwinners.com. Email me. okay? And if you need something like that, or if you have a question about it, ask me, all right? And you can say, Pat, can I have your telephone number? And really nobody knows my telephone number, okay? And it's simply, through the years, it's cost me a lot of money. When I get I'm like, even my own mom I've had to hang up on. Mom, I gotta go. I won't tell you what she says.
It's probably important to say that if they want to contact you during the day, or reach in Twitter.
Yeah.
You're in Twitter all day long.
That's right, real time.
At Patrick Clark 56.
Yeah, I'm live. And it's free. Just reach me. Yes.
So your opinion about, let's see, blue chip dividend earning stocks, typically they don't outperform the S&P, isn't that?
Actually, that is a great question about dividend-paying stocks. I have to share this with you. My good buddy Chris, who's the day trader, also, he knows a lot about he knows more about dividend stock. I've known Chris over 20 years, okay? We were in the minute room together years ago and got kicked out, okay? So that's a whole different story. So, we'll leave that alone. There's a great website to go through for dividend stocks. Great information here for you folks. Dividend Achievers. Dividend Achievers. I've been there. It is awesome. And Chris points out, a dividend supports the price of the stock to a degree. Okay? And these are companies that have their dividends constantly go up. They never cut them. It's not a ton of stocks, all right? But you take a look at the charts and you can say the dividend literally supports the price, all right? Oh, by the way, no high yield, we're talking like 20 no. Quality companies, all right? So anyway, dividend achievers, I just wanted to share that with you. Okay, let's get...
And typically they do not outperform the S&P.
Yes, they do. Yes, they do. Oh, yeah.
J&J?
Yeah. Things like, now I don't know about that one specifically, because I don't know what the yield is or anything like that. I don't even know if J&J is a dividend achiever. But go to their site and just noodle around. By the way, please, I don't work for them. I don't want you to think, I'm trying to say, no, good Lord, no. Just go there and do some research on them for quality. Let's continue on here. I'm going to keep it in these stocks, okay? Hit this one, ZS. Okay, hit this one, CYBR. I just want to show you, when we're talking about good numbers, I want to show you what some of these stocks have done. CYBR?
CYBR.
B as in boy?
Oh. CYBR.
Yep. Cyber. There you go. CyberArk. We own this. Look, it just goes up. I mean, look at the numbers. Look at the group. Breaks through, and it just goes. It just goes. We're here like at 82, and it's trading at 116. You can say, hey, that's pretty freaking good money. And just letting it go. Let it work, okay? I'm going to show you something. By the way, I'm not bragging about these. I'm trying to bring up the points so you can train your eyes, train your mind. Hit this one, okay, good buddy? Do WIX. Wix has got good numbers. I'm showing this because you can see, gosh, look at that. Now that's kind of interesting. It's got great numbers. It's in a great group. Hit the weekly.
That's a couple of handle, would you say?
Well, what happened? Did we lose internet?
No, you want the weekly? You can answer the question. I'm sorry.
Oh, yeah, hit the weekly.
Hit the weekly.
Yeah.
I thought we should go.
Oh, I'm sorry. Now, this is why you should look at dailies and look at weeklies. What is the one... First off, does it have great numbers?
Yes.
Yes. Is it in a good group?
Yes.
Yes. Does it have good relative strength? Yes. Here's the numbers over here, okay? Now, looking at that chart on a weekly, I'll ask you, what's one negative in that chart?
What's the green line? A lot of red though.
High red bars.
High red bars.
That's a big red bar. Okay, so now we're looking at the weekly. Let's fine tune it. I encourage you, whenever you're doing this, look at the daily and look at the weekly charts. Okay? It'll make it better for you, I promise, okay? Now, so this is what we're looking at. Let's go to the daily, Owen. Now you see it. What was it? They had earnings. They had earnings. Now, looking at this, it gapped down on unbelievably heavy volume, okay? And it meandered around. Tell me about that bar. Good bar? Yeah, it's a good bar. Good volume? Yes. Did it completely offset this? No. No, it didn't. This bar is bigger than this one. But it is starting to turn a corner here. Could it base a little bit longer and start to go again? Yes. But now I've got another question. By the way, is this getting to be too much minutia for you?
Called filling the gap.
Yeah. Good. Good. Okay, now I have a question for you. Looking at that chart, the last 5 trading days, I want you to look at the price and I want you to look at the volume bars closely, please. By the way, folks, I stress, I'm not, you know why I do this? Because, geez, I wish somebody had done this for me when I was getting into this. Because it would have helped me avoid some major hits, okay? But there was nobody doing this. Nobody was out there, so. Looking at the last 5 bars, is that a good bar?
Yeah.
Was it on good volume?
Yeah.
Okay. It went up here on average daily volume. So that's not bad, is it? This bar? You're still okay. Tell me about that bar.
Those are the bottom.
Yeah. Keep going.
I like that.
What else?
Higher the volume than that last day.
Thank you. A pickup in volume. So what does that tell you? It's met with
Selling.
sellers. Folks, this is something most people don't talk about, is charts are simply a reflection of buyers' emotions. I want you to think about this. Do you think there were some people that bought the stock up here? Yeah, of course. You think there were some people that bought it up here? You think there's some people that bought it up here and then see it drop all the way down and they're down 20 freaking points in 3 weeks? Going, what the heck did I do to myself? And you can say, well, it came back. Hey, when it's doing that, don't feed me that line. You don't know the future. All you know is your ass is down 20 points right now. It may keep dropping, right? Now, I want you to all think about this, okay? This is what we teach, okay? Is this still on? Is this still working? Me too. Okay. It runs back up, and it approaches this price right here, right? And the next bar, it started to fall on a pickup in volume. I have a question for you. Who's selling? Yeah, that's so great. Folks, people that bought it here said, sheesh, thank God. There's ladies here, so I won't tell you what I really think. Thank God I'm back to my cost. I can get out. And folks, that is why, have you ever heard of a double top formation? Okay, watch, you know what? I'm going to do something for you. I'll do it right here. I could show you one, but I don't want to noodle all the way back. Or should I show them a real one? Sure. Okay, punch up Tesla. I'll show you the real world. And we had people in this, and I said, this is where the flick we're getting out. Okay?
Was this before or after the Joe Rogan incident?
Oh, it was a long time ago. It was back when I had here. Oh, and change the date on this to 2000 and change it to 2018. Just change that. There you go. I think we'll be able to see it. I'm going to show y'all something that's really pretty dang cool. Let's change that 9. There you go. Perfect. Folks, charts are a reflection of people's emotions. If you can remember that, you're light years ahead of everybody. Have you ever heard that before? Have you ever heard that anywhere else before? No. Okay. And again, one of the degrees I got is in psychology. The stock's going up in price. What does that mean? People are buying it. Okay, it's moving on up. And it hits right here. All right? And then it drops on some pretty dang heavy volume. I have a question for you. Do you think there was anybody that bought that stock up here that took it all the way down 80 points?
Oh, yeah.
Shit, yeah, of course there is. Yeah. You know, it's like, oh, this is a friend. By the way, lose this thought. I'm a long-term investor, okay? Be long-term as long as it's good. Because I will tell you this, I can show you examples where it didn't do this. It just keeps on going down. And you are in big trouble. And I will tell you this, it will eat you up. I'm only man enough. I'm a pretty tough guy. All right? I had a gun pulled on me twice. I've sat at my desk and cried because of the whipping I've taken because of my stupidity. Don't do that. Don't do that to yourself. So, here we go. Goes down. And then it starts to come back up in price. Now, let's think this through, folks. Starts to go back. Why is it going up in price? Because people are, they're just buying the stock, okay? Goes up, pulls back again here, starts to go up again on good volume, okay? Meanders around, and it comes right back up here, all right? And give or take a couple of bucks, it runs right up here, and then boom, down like this. I have a question for you. Do you think there are people that bought this up here and watched it go all the way down here and didn't sell? Yeah, heck yeah. Meanders around, and it comes back up near your price. If that was one of you, what do you say? Thanks. Thank God I'm back at my price. I'm going to give more to the church. I'm getting my ass out of this stock right now. Right? And I sell. And you know what, folks? Do you know what that is? It's something that's always talked about, but nobody analyzes it. And that's why we're writing the book on this, all right? It's called the double top. You ever heard of the double top formation? Now you know what it is. There were people that bought it down here, watched it go here, watched it drop, but they didn't sell. They didn't sell. When it comes back up near their price, by the way, do you think there were people that bought the stock down here that didn't own it before?
Oh, yeah.
Yeah, heck yeah. You think there were people that bought it here that didn't own it before? Heck yeah. Do you think that they watched this son of a buck go all the way up here and say, by Jove, I know there's people that didn't sell here, and when it gets back up here, you know what they're going to do? They're getting their butt out of Dodge. And you know what? You see this bar right here? The selling was so big, it actually gaps down. Look at the gap. It closes here, opens, gaps down, okay? Right there. And you know what? It's off to the races. Now, we had people in this stock. We had VIPs in this stock. And you can say, Pat, where did you pick this up? This had a downward sloping line right here. And we picked it up right here. And you can say, why would you do that? Because we have another list of stocks called max list stocks. And it's a list of stocks that I put together, and some of you know it, right? It's a list of institutional stocks that they have to own. Folks, I will tell you this. If you run a mutual fund and you don't have Apple in your portfolio, you're going to get fired. If you don't have Amazon in your portfolio, you're going to get fired. If you don't have Google in your portfolio, you're going to get fired. There are certain stocks the institutions will just plow into. We have it. It's called the Max List. And these are the names. Apple, Amazon, Google, Tesla's in there, Alibaba's in there, Baidu, Goldman Sachs, Square, NVIDIA, MasterCard, Visa, the names that, pardon me? No, not in there. Not, good question, no.
Not boring.
Because it's not the type of institutional growth stock that I want. It doesn't have the numbers and the robust numbers, and it doesn't move the way that I want.
But the institutions are.
Oh, the institutions own it, but not the way that I want them to move in and out. You take a look at the average daily volume like on Apple, okay, and multiply it out, $100 million flowing in and out of that stock, plus every day. You can glide in and you can glide out. But Boeing is institutional. Yes, okay? But I don't like the movement, and I'm sure not going to touch it now. Okay, so there was a downward sloping trend line. We picked it up right here. It ran right up. You can say, well, that's not much, okay? Well, I don't know. Taking the stock from, what's the price right here, Owen? 350 something? And it ran right up here. It was like, we made like 35 points in what, 5 days? We just sold it. It's a thing. Yeah, take it. And by the way, on the Bible, and I do mean that when I say it, did I look at any 5-minute charts when we did that? No. It's simple. If you're on Mission Winners, I'll give you the max list. I don't know if we have it in this computer, do we?
I don't know if we do.
I don't know. Anyway, so there's Tesla. Now, here's what I want to do. Before we do it, let's stop for a second. I want to show you a couple more stocks real quick. Punch up, did we do Keystone yet? Keys? Punch up Keys. I just want to drive home the point on what to look for, folks. Oh, yeah, I was going to say, that's not. keys. Entry right here. And some of you in this room I know own it. You don't have to tell me who, but I know you do. All right? Push up right through here. And it's just walking up. Would we sell it now? No, why? Do we sell some into strength to lock in some profits? Some? Yeah. Just let it go, okay? Do another one here for me. Let's do,
Can you go back in time on that to, right before you bought it?
sure, let's do it. Change the date back?
Yeah.
You betcha. Let's do it, Owen. Let's change the date back to January. Let's do January 4th.
January 4th.
Sure. This is what we were looking at on January 4th.
That's when the market went into an uptrend.
There we go. This was on the key list, and I know, again, I can document it, because I can, by Jove, I can't do it on this computer. Well, I guess we could, but I'm going to do it. This was on the key list the night before this went up.
What was the trigger?
Great question. You see this nice little pattern right here? All right. See that increasing volume right here? See the relative strength line? Almost at new high ground, even though price is not. This stock, okay, we went through what relative strength. That's a great question. We went through relative strength. Not RSI, relative strength. You can say, price isn't at new highs. By Jove, relative strength's almost at new highs. This stock is outperforming the market. Boy, heck, isn't this, huh? The market was getting its butt kicked, and this stock's is outperforming the market. Also, I will tell you this, and we're going to go through it. You think this stock had great numbers before it broke out? Was this stock in a great group when it broke out? Oh, yes. Sure. I love your questions, folks. Down weeky volume, but again, look at that relative strength right here. Read it. And it had great numbers, and there were other stocks in the group that were acting well. We connect the dots, which leads me to a point. When I run my screens, I said this before, how do I sort my list? Thank you, Mark, by industry group rank first. All the stocks that are in the same industry group, they're all together on my list. That's my first sort. What's my second sort on that list? Mark, you get the gold star. That's right, percent off high. Why? Leading groups and leading stocks. It automatically forces me to look at those. And it lifts through here, and it just marches up. And it takes off. And again, click on the daily. Let's go back to and jump to the date to today. Just to show you, you can say, Patrick, let's talk about numbers again. You can say, well, the earnings were up 82%. 82%. No, then you're catching me a lie. What were their earnings before it broke out? 42%. But is that greater than 40? And I said earnings 40% or higher? There you go. It's documented.
Can you look at Splunk on that?
Which one?
Splunk, S-P-L-K.
Sure, let's do Splunk. We owned this at one time. There you go. Okay, should we walk through it?
That'd be very helpful.
All right, let's do it. First thing I look at is I just glance at the chart. I'm going to walk you through this, okay? I glance at the chart. Does the chart look decent? Yeah, it's above the right. You can say, Patrick, what do you mean by decent? Is it above the 50-day moving average line? Is the 50-day moving average line going up? Is it near 52-week highs? Yeah, it's decent, okay? Now, let's take it a step further. I glance very quickly. It's an A-plus rated group. That's important to me. Last quarter's earnings were up 41%, so it meets the minimum threshold of 40%. That's excellent, all right? Now, I have a question for you. Who here would like to, and I'm not putting anybody on the spot, okay? Who here would like to do an analysis on that chart? Go for it.
Well, I bought after I should say, it went all the way down to 119.51. I saw that and it started recovering, and I bought just after that about 126. So I'm down to like $2.
Okay.
I watched it go up. I thought, well, that's looking good. And the volume wasn't what I would like it to be. It still doesn't have enough volume to make up for those big down days.
Good.
And 3 days ago when it was up, I should have got out of it, but then it fell down, you see.
Oh, yeah.
Some kind of, what do I do now?
Good. See, I'm glad you picked this one. Folks, this is a great education here. Price and volume. Remember that. Price and volume. Forget the news. Price and volume. The stock was going up, right? How was the volume going up? How was it? Was it below the 50? It's crummy. It's crummy. All right? It goes up. It's just average. It's going up. And then right here, I want to show you. You ready for this? This is what's so neat though. Price and volume. Owen, put your cursor on this bar right there. Keep going, right there. That day, they had earnings. Now, I've got a question for you, Mark, because I don't know. When did earnings come out? Was it before the open, or during the day, or after the close? Okay, good. I was hoping you were going to say that. This is just, folks, this is the real world. Check this out. Okay, can you take that cursor off? This is the day that earnings came out. It runs up, it takes out the previous day's highs, I do believe, and then reverses and closes near its lows for the day. Look at the big volume pickup. Look at that. Folks, they sold into it. That was before earnings came out. They were selling. You watch that. I don't even tell you get excited about it. I just think it's so cool because it's just a reflection of supply and demand. People like insider trading, I don't give a rat's ass about that. They sold. Is that a trigger right there? Especially in light of earnings coming out. My God, you better be careful.
Do you look at options?
Yeah. Should we do that? Okay, go ahead.
Could we try one,
Yeah.
RDIV?
Sure. Does that help y'all? Oh, wait, leave this up just a second. Is that still up? Okay.
What do I do with that valve? I've just got a $2 down.
Watch it very closely, and I'll tell you a big trigger. You see what, folks, I'm going to show you something really neat. Did it fall on heavy volume?
Yeah.
Yes. Did it go back up?
Yeah.
Yes. But did it go back up on less volume than it fell?
Yeah.
Thank you. All right. What did it do 2 to 3 days ago? It fell on...
Heavier.
See, this is big stuff. It fell on heavy... What did it do this day? Heavy volume. What did it do today?
I'll think about it. It's hanging there. It's up a little bit, but I mean,
But how did it close? Yeah. How did it close today?
it's up a little bit. It closed kind of the middle of the lower part of the range.
Thank you. Closed in the bottom of the average range. Every day, take a look at price and volume and note the range of the bar. Where does it close on that daily bar? Have you ever heard that talked about before? Yeah. And that's, when you're supporting 6 people, you look at this stuff, you know. So now today, it runs up and it closes near its lows. On the paper. Problem if it takes this out right there. That could be a problem. You got to watch it and see. Okay, what were we going to look at? Options. Let's do options.
RDIV.
You got it. Okay, great. It's an ETF. Okay? S&P 900, a little bit broader. Okay, here's a question for you. Just looking at the chart, is it a decent looking base? Yeah, there's a little bit of distribution in there, but there's a little bit of accumulation in there. And you know how I can tell? I see the red bars and I see the blue bars, but there's also something else. It's got an accumulation distribution rank of B. So a little bit of a E is the worst, A is the best, B, a little bit of accumulation. So that's not bad. Relative strength's kind of lagging here, but it's an ETF. Okay, just a question for you. What catches your eye today?
Well, the S&P is sitting way up here, so it's not even coming, it's not beating the S&P, correct?
No.
Yeah.
Well, actually, what's the S&P? Right here's the S&P 500. Right here's the relative strength line. Is it? After our discussion? Really, relative strength line. Yeah, that's exactly right. It's not really doing much of anything. Now, take that a step further. What's the, if there was one positive takeaway about this, what is it?
The dividend.
Volume today.
There you go. Today.
Volume today.
The volume today helps. Yeah, the volume today helps. Okay, now, here's what I want to do, though. We're going to get into something else important, because I have some questions that I want to answer, okay? From people that emailed stuff in. All right, here we go. How are we doing for time, Owen?
30 minutes.
Once I get going, I can't stop. Lord, let me tell you. I had a question from a gentleman named Patrick. All right? Patrick, this is, by the way, if you ever have any question, you email me. I want you all to know something. I will never use your last name. Out of respect for your privacy. That's where I come from. All right? I also shared this with you years ago when I managed money. I said this to people before. I had a client who's in the Rock and Roll Hall of Fame. But you ain't going to find out who it is. So here we go. Patrick asked a question about pyramiding. Rules of proper pyramiding. I want to show you something. This is from Canslim Level 3. This is one of the times I met Bill. This was $3,500 seminar that I went to that he was at. But they got me in for free. So, yeah, that was me. It pays to know people. Okay, so here's the rules of pyramiding for you, all right? You want to put $20,000 to work. This is important. This is Canslim stuff now. This is advanced Canslim stuff. Your first purchase, right when it breaks out, you put $50,000, you put 50% to work, $10,000. If the stock advances 2 to 2.5%, you put in another 30 to 35% of your $20,000. In other words, you put in basically $6,000. If the stock advances another 2 to 2.5%, you put in your last 15 to 20% or $4,000. So, I'm going to nuts and bolts this for you. You have $20,000 to invest in a stock. You can transpose it and say, I only have 10 to invest. Well, the judge changed the numbers. You've got $20,000 to invest. Right when it breaks out, you buy $10,000 worth. If the stock goes up 2 to 2.5%, you buy another $6,000 worth, I'm sorry. If the stock advances another 2 to 2.5% above that, you buy your last $4,000. That's how you do it. 10-6-4. That's from Canslim Level 3 and Canslim Level 4. All right?
You want to do that with the practice stock?
Pardon me?
You want to, I'm interested in, because I made a mistake, so I'm going
Oh, that's, okay.
to go back to March 1st,
Sure. On which one?
Yeti.
Oh, yeah. Sure, let's do it. Good question. I love your questions, folks. I really do. This is good. This is really good. Oh, we'll change the date. We got to change the date, though, because we're on March 1st. Can you jump that to today, Owen? Or you can
Well, I'm
just hit that down arrow here, and we'll go to today so we can look at the current. And just hit reset to today. Oh, you can hit that too. Okay. Perfect. Now we got the chart.
Yeah.
Does that help?
Yeah.
Okay.
It came out with earnings, which were good earnings.
Right here.
Yeah, it gapped out.
Right. Great.
So if you were buying 50%, would you buy 50% if you gap up?
Yes.
And then when would you have purchased?
Great question. And I don't have a calculator with me. After it's gone up 2 to 2.5% from your pivot price, let's just make the math simple for us for this example. You bought it, the first price was $20.
Right.
Okay, goes up 2 to 2.5% from $20.
Yeah.
All right, you add, in this instance, and this is straight from O'Neill, okay, 30% more. So if you were going to put in, let's quantify it. If you were going to put in $20,000 total into the stock, you're going to buy, the first purchase is $10,000, the next purchase is $6,000, and the last purchase, if it goes up another 2 to 2.5%, is $4,000. Now here's the thing that's important about this, and this is the part I love about this method. If it doesn't go up in price and starts to fall, you don't have all your money in it, right? For you to put more money in it, it's got to earn it. It's got to earn more money. And if it doesn't, yeah. By the way, I want to pause here and say this for you. if you walk away from tonight, remember just a couple things. Remember this, the great numbers, etc. Really clean bases that everybody can see. And if you buy something, look for really clean chart patterns. Really simple chart patterns, nothing fancy. Simple chart patterns that everybody can see. And when it pushes through that pivot price, take it down to an hourly and 30-minute chart. You want to see volume flooding that stock at the pivot price. If you don't see it, don't buy it. Just leave it. Why? And I will tell you why. Because you're wrong. You're the only person, and I can say, I'm wrong, okay? I'm the only person in the world. My buddy Robert in California, we trade together. Yeah, I guess we're the only two people in the whole world. There were other words interspersed with this, okay? I guess we're the only two people in the whole world bless you, that saw this. You want to see other people voting with you, which leads to another point. Focus on really clean, tight, simple chart pattern. We talk about this all day long at Mission Winners, and you can ask a couple of the members in here. Clean and simple patterns that everybody can see, and it's good above that price. If the perfect breakout is $20 a share, and its volume's coming into it, and it's pushing up through 20, by God, if that thing falls below $20 a share, you're wrong, sell half of your shares. You say, what, 7% loss? No, at 19 3/4, see, I'm dating myself because that's when we did stuff, 19, you're wrong. It shouldn't do that. This is what you're going to find through experience. The best stocks will just push away, which leads to a great strategy for you, especially with Fidelity. Put in a buy stop and put in a contingent sell stop. Anybody know what that, does not know what that means? Everybody know what that means? Okay, good. Thank you.
Well, what is it?
Pardon?
Contingent sell stop, what is it?
Oh, I was going to tell you.
Okay, I'm sorry.
No, that's all right. That's all right. See, that's pretty good. Okay. A contingent sell stop is a sell stop that will become an automatic order contingent if the buy stop is hit first. All right? The buy stop has to get hit first before your sell stop can become an order. And you can say, why would you do that? Let's think this through. Let's suppose you have a buy stop and you have a sell stop, not a contingent buy stop or a contingent sell stop. And the stock starts to drop in price and you get filled on your sell stop and then the stock shoots and goes back up and you're going, shh, now I'm in big trouble. So it is called, this is important, a contingent sell stop. Something to remember. Okay, I'm going to answer some more questions here from people from, believe it or not, around the world. Options. We're going to mention options here a little bit, okay? I'm going to go very slow with this because we want to talk about options a little bit, don't we?
Yes.
Yeah, okay. Does anybody here know much about options, or do you know very little about options? Okay, great. I'm going to go very slow here. This is important. We talk about stocks going up in price. You can buy the stock. Or you could also, I'm sorry, I'm in your way. Or you could also buy options on the stock. An option is a contract that allows you to buy that stock at a certain price within a certain time. Option contracts come out basically almost every week. They're contracts. So you could buy, punch up, let's do Amazon, can we? Let's just do Amazon.
Are we going to want to look at option chains tonight?
No, I don't think. I think it'd be too much. We're going to be real simple here. So let's suppose you want to buy Amazon. Or you can say, well, you know what? I think what I'll do is instead of buying Amazon, I will buy a call contract on Amazon. I'm going to stop right now and tell you this. If I say something that you don't understand, raise your hand and say, I don't know what the heck you're talking about. Okay, this is important. All right? I'm going to back out and say this too. Options are great, and you can lose a tremendous amount of money very fast. I'm not kidding. If you think stocks are bad, options can rip you apart. But they're also a wonderful investing tool. So let's suppose You know what, that's probably too high of a price stock to do, isn't it? Yeah, let's do Netflix. Let's do,
Or
what do you pick? You pick.
you want to talk about like Qs?
Pardon?
Qs?
Sure, let's do the Qs. Or QLD, we'll do QLD.
Well, you can't do options on Q. You can, but they're too spread.
Right, okay. That's true. I was going to say, because I do. Okay. All right, so you're going to buy the Qs. So you could buy the stock, $180 a share. Or you could buy, there's two types of contracts. There's a call contract and there's a put contract. If you buy a call, you want the stock to go up in price. If you buy a put, you want the stock to go down in price. And I learned this years ago in an options seminar. People go, man, that gets confusing. Just think of a telephone. Call up, put down. Call somebody up, put it down. The receiver. That's all. Call, you want it to go up. So you buy a call anticipating that the stock is going to go up in price. Each call is good for 100 shares. You can buy a call that expires this Friday. You can buy a call that expires next Friday. You can go out every week on these calls. When you buy a call, and I'm going really slow here, when you buy a call, you want the stock to go up in price. Now I want you to think this through. You're going to pay for that. So let's suppose that you bought a call on the Qs that says, I'm going to buy the Qs for we'll say $185 a share, and the option call contract expires next Friday. Let's just do that for an example. Next Friday. You're going to pay a certain amount for it, X dollars. Let's use some common sense. You bought a call contract that expires this Friday. Or you have a choice. You could buy a call contract that the trigger's $180 for next Friday. It goes out another week. Do you think you would pay more for the one that goes out further?
Yep.
Yes! Great concept. You got the concept. Why? Because the odds are better that by next week it will work. So let's take it a step further. You want to buy a call contract going out a month. Will you pay more for that contract than you would a contract that expires this Friday? Yes. The more further out you go in time, the more you're going to pay in what's called premium.
Right, but that's not always the case. You can look at June calls for Apple, and they're 40 cents. Look at July calls, they're 20 or 50 cents. It's every month is different depending on the volume and the open interest. So how do you? There's another
variable associated in there too, though.
Okay.
Earnings coming. Earnings in between those two times can skew price too.
Oh.
Yeah, that's a good point. So now, is everybody tracking with me so far on this? All right? Okay, and again, I know I'm going slow. Now, let's think this through. You're going to buy a call contract, and each call is good for 100 shares, okay? You're going to buy a call contract that expires this week, but allows you, if the stock is at $185, you can buy the stock for $185. So what are you betting on? That by this Friday, the stock is going to be over $185, right? If it is not, what happens to your contract?
Worthless.
Thank you. It expires worthless, and you lost your money that you paid for it. It's gone. Complete loss. All right? Could you sell it at any time before it expires? Yeah, assuming there's some value, yes. So options contracts have a finite life. It's not like a stock. You can just own it. Time is constantly running out on the stock, and it is literally a race between time running out and hopefully price going up. If the price of the stock goes up, What happens to the price of your call contract? It goes up also. Very good. All right? It goes up also. If the price of the stock falls below $185 and closes below $185 at options expiration this Friday, the value of your call is worthless. You lost your money. It's gone. Now, I know I'm going really slow, but this is important. Do you have the opportunity between when you buy it and when the options expires that you could sell it? Yeah, you could sell it any time. All right, anytime. It trades when the market, it's just trading. All right, you have the opportunity to get out at any time. But now I want you to think about this. This is very important. You bought a contract that allows you to buy the Qs this Friday at $185. Well, today's Tuesday. We've got 3 days left. Let's suppose that today you bought it, and I'm just going to make up a number. You bought it for $100. Tomorrow, the stock doesn't move up, and I'm just making up just a second. Okay. Tomorrow, the stock does not move up in price. It just stays the same. That option's expired this Friday. Thank you. What happens to the price of your option? It goes down. It's losing what's called time value. There's time value, and then there's what's called intrinsic value, the actual value of the option in relation to the stock. Now, I'll take it a step further. Let's suppose that we're going to do two scenarios. You buy the contract that allows you to buy the stock for $185, and the stock drops this week. What happens to the price of your option? It goes down, right? And this Friday, your option expires worthless. Now, here's the plus to this. If you bought the option contract that allows you to buy the stock for $185 this Friday, and let's suppose you bought it for $150, okay, for one contract, just for the sake of example. You have two choices. You could buy, and that allows you to buy 100 shares of the stock, okay? So you've got how much money at risk? $150. That's all. Nothing else. $150. Let's suppose that bad news comes out on the market and it gaps down to $170. If you bought the stock, you just lost 10 points on 100 shares. You just lost $1,000, right? But if you bought the call and you spent $150, how much did you lose? That's it. You got it. The most you can lose is what you paid for in the call, $150. So you can see in a very simplistic approach the pluses and the minuses of it. I'm going to take it a step further. There's also what's called time value. Let's suppose that we bought a call that expires this Friday that allows us to buy the Qs at $185 a share. And we bought it today. That option expires this Friday at the close. Tomorrow, if the price of this stock stays exactly the same, doesn't go up or down, what happens to the price of our call option? It goes down. You're exactly right. Why?
Running out of time.
That's it. It's running out of time. It lost a day. It lost a day. If the next day it does nothing, if you bought the stock, you don't lose anything. But every day, you're going to lose value. By the way, I'm not trying to bring out a negative point on this. It's just that it's it's something that needs to be talked about. All right? So, what kind of stocks are good for doing options? I'll ask you. Stocks that
Go on.
Stocks that go up and that hopefully will go up quickly. Okay, now, there's what's called an options specialist on the floor of the options exchange. Do you think that they know which stocks are the ones that really move and ones that don't. So what will they do? If you have a stock that can really move fast, will you pay a higher premium for that option than you will if the stock is really slow? Yeah, so there's basically no free lunch with it, okay? You may pay extra premium for it. And if the stock does not move, it means you lose even more money. Now, I'm going to really drive home a point. Let's suppose you bought the Qs and it gaps down 20 points and you own 100 shares. How much did you lose on 100 shares? $2,000. If you bought, hold on please. If you bought the options contract, am I good? If you bought the options contract, how much did you lose? How much did you lose? The stock gapped down 20 points. How much did you lose on the options contract?
Whatever you paid for.
That's it. That's the most you can lose is what you paid for it. All right? That's how calls work. Puts are the exact opposite. You're thinking that the stock is going to go down in price. And it's the exact inverse. If the stock goes down in price and you buy a put, the put goes up in value. But it's a race. You will pay premium for it. And as the price is going one way, let's suppose you bought calls, and the price is going up, the price of the option is going up. But what is happening also? Time value is diminishing. So I used to get this all the time. This is, we'll keep it clean. This is bad. The stock went up $1 and my call only went up 80 cents. It only went up $80. 100 shares of the stock would have made you $100. I own a call, I only made $80. What a racket, what a racket. Why? Because time value is constantly working against it because the options expire. In this instance, we get a weekly call. Okay? So that is just an overview lesson for you on it. Here's a moral to the story for you, because I got a couple more questions I want to answer here from the people around. If you're going to do options, try to buy options on stocks that move. But remember this, if a stock that has the potential to really move, you will pay more premium for that option. It's efficient, overall it's fairly efficiently priced. There ain't no free lunch on Wall Street anymore. There used to be, but not much anymore. It allows you, though, to control some stock with a lot less money. But I do stress, folks, really know what you're doing because you can just blow through money because you will have calls that every Friday expire worthless. And you're going, that money's just gone. So the moral, this is why we really go through the charts carefully so that you can find something that breaks through a spot. And if you own options, you can make money faster. But if you remember one thing, it's this. Please be careful. Please be careful. And I'll say this too. I don't care who you're talking to. Never, ever sell options naked. Okay?
I've done it. Usually on Monday.
Yeah, pardon?
What do you mean by that?
No more.
You sell it and you just bring in premium. You just collect the premium. But if it goes against you, you can get hurt really, really bad.
But usually I do it on Monday and then it expires.
That week, yeah.
Yeah, you can
Yeah.
actually, if you do it right, I'm out of it some days on
Yeah.
Tuesday and Wednesday.
Yeah.
You can sell it to credit.
That's correct. That's correct. So just be careful with all that. I want to answer a couple more questions here, okay?
So when you're short of stock, that means you're...
Great question. You buy the stock and you're anticipating, when you short a stock, you're anticipating that it is going to drop in price. If you shorted it $100 a share and it falls to $90 a share, you can buy it back at 90 and you made 10 points. That is selling short. There's a margin requirement with that though too, just to let you know. But that's selling short. Now the inverse though, if you sell a stock short and it goes up in price,
Got a margin call and
you need to eventually find a spot where you buy it back to also limit your losses. Be really, I'm hesitant to go too deep with all that, just be really careful with the options and be really careful with shorting. I've got another question here, and this one is for Alexander. And Alexander was talking about, do you look at 5-minute charts? Do you look at, what chart time frame do you want to use? And I will share this with you, Alexander, and this is for all of us. And we've discussed it quite a bit tonight. Please focus on daily charts and weekly charts and look for really clean and simple patterns that everybody can see. I used to say this, and I think it pissed somebody off. Look for a chart Ray Charles can see. Just simple. Because if everybody sees it, it increases the odds they will buy it also. I stress that. And fine-tune it down to the hourly and 30-minute as it approaches the pivot price, and look for volume coming into that stock. That will really help you. It will really help you. And I will say it again, and Alexander, this is for you. Stay away from the 5-minute charts for your sake. Stay away from them. And no day trading. No day trading. I can tell you this, honest to God. How many 5-minute charts, Tony, how many 5-minute charts do you think I've looked at the last couple of months? None. Zero. I don't look at them. It cost me so much money. Don't do that. We discussed a little bit on strategies, but this is a question for John. John, the best thing you can do is this, and this is for all of you. Focus on stocks, and I'm saying it again, that last quarter's earnings were up 40% or higher, or, not and, or last quarter's sales for the last 2 quarters were up on average 45%. Look for stocks that are over $10 a share. Look for stocks that trade at least 200,000 shares a day. Tony knows all this, I know that. Look for stocks that are above the 50-day moving average line. Look for stocks that are within 20% of 52-week highs. And look for stocks in the top 40 industry groups. And if you do that, you can say, well, Pat, what does that come up to? I can tell you, I could pull it up right now because I ran it today. And I sent the list to Owen, the key list. Every night we make a key list and we send it to the VIPs with our buy list. Basically, with those constraints, it comes out to be 140 stocks, 140 out of 7,000 stocks, and that's my universe. That's all. Another question. Mike asked, and I think I've answered this, Mike. Focus on really clean and simple chart patterns. If you walk away from here, folks, remember this. Great earnings and our great sales and leading groups, clean and simple chart patterns will really help. And focus on the daily, the hourly, and the 30-minute. Focus on volume surges through those spots. I say it a lot, but I can't. I'm always thinking, why? I wish somebody would have pounded me in the head. Say, were you stupid? Quit looking at that other crap. Stick with this, and you'll make more money. After a stock's gone up in price, all right, if it's reached a logical point, sell a little bit into strength. You can say, Pat, quantify that statement. Sell 20%. Don't sell it all. I've said this before. You'll never go broke taking a profit. That's a lie. Have you ever heard that quote before? By Jove, if your losses are bigger than your profits, you're going to frickin' go broke. So it is compulsory that you hang on to some of your shares for as long as humanly possible. And how can you do that? By looking at daily charts and looking at what moving average is? 8 exponential moving average, and let the thing trend as long as humanly possible. After you have a big cushion on it, you can give it to what? The 20-day. If you have a really good cushion on it, we've got stocks right now, give it all the way down to the 50-day. I'm not going to freak out. Don't do that to yourself. I think it's very important. So you raise them up, okay? This is very important, folks. The M in Mission Winner stands for the market, and I cannot stress enough. When the market is bad, stay away. I will go through weeks, months. I don't do anything. What, you going to scalp a little bit? No. Simple money is made in longer trends on the charts. I can't stress that enough. Great stocks with great numbers and great groups, and then just let them trend. And after you've got a good profit, and maybe you've taken a little bit off, 20% off, take them off your front page and don't look at them. Put a limit alert on there, not a stop. Put a limit alert on there to alert you if it drops. Other than that, just let it go. Let it go. Let it work for you. Let's see.
More of a buy and hold philosophy at that point?
I'll hold it for as long as it's good, however long that is. And how long is that? I don't know.
Okay, since you looked at keys,
Yes.
to go back to keys.
Sure, let's do it. Let's look at keys.
You got a really good cushion in there, so which moving average are you, after you took a little off the table?
Great question, Tony.
Then what moving average are you going to use to
Great.
start selling?
Let's talk about it. We own this. I own this. Okay? We bought it right here, and I can document it. Okay? I'm not bragging, okay? It's just, look at the numbers. It meets the constraint. Look at the group. Look at the relative strength line. Folks, price is lower here than here. True? Relative strength is higher here than here. There's strength there, and it was in a great group. It's simple, and everybody in the world saw it. How do I know that? They voted. How do I know they voted? Had volume coming into it. Not explosive, but it was moving up. And again, the market was good too. So now, we sold some into strength. I'm going to ask you, this is the 20-day. Should I sell the rest of the shares if it loses the 20-day? Should I? No. I locked in some profits. What should I give it to? What moving average, I'm sorry, I'm blocking you. What moving average could it come down to and maybe bounce? The 50-day. Folks, look at this. This sucker, by the time it comes down to the 50-day, the 50-day will be over $80 a share, barring it doesn't do it, tomorrow or something like that. The 50-day is going to be over $80 a share. We own it right here, just a little over 63. All right? We're still up 17 points. And I'm not being sloppy, but I'll ask you, has anybody ever read a book about a stock coming down to the 50-day and thanks, that's the word, and bouncing off of it? Yeah, it might lend a spot for us to buy more. So what do? We wait. By selling all of it, I have imposed my will on it instead of it letting it tell me what to do. Let it work. Now, I'll tell you what, it's 9:02, and we should wrap this out here, don't you think? I thank you all. Again, I'll stress this. If you have questions, it's missionwinners.com. And what you saw today, and there's a couple of VIPs in this room, we make a video every night that's about 20 minutes long that we hash through this every night. Every night. And the other thing is we're available to answer questions real time. And I get buy and sell alerts. Yes, sir.
What was your Twitter?
It's Mission Winners.
Patrick Walker?
56, give him that one?
Yeah.
Okay.
You won't be able to get the other one.
Okay, Patrick Walker, 56. And you can say, what's 56? It's my IQ. No, it's on a good day. It's the year I was born. How about that? Patrick Walker, 56. So I thank you all for coming.